The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule. And that's all the rules there are.
Warren Buffett's most famous quote. Rule number 1, never lose money. Rule number 2, never forget rule number 1. But we all know another market crash is coming, yet we don't take action. Ideally, your investments should never lose money. But history tells us that in any given year, there is about a 30% chance that the S&P will end in the red. And we also know that a market correction happens roughly every 10 years. Your financial advisor will tell you, don't worry, keep investing. If you just hold on, your money will come back. And he tells you that because he makes money on your money, whether you win or lose. I hate to break it to you, but when you lose money in the market, that money is gone and it's not coming back. You know, if you lose 50% of your investment, you actually need to make 100% in order to break even. And in 2008, investors lost up to 40%. The question is, how much more money would you have today if you hadn't lost the initial principal in the first place? And it took 5 years for the market to recover in the last recession, and something like 22 to 25 years in the Great Depression. This is what happens when you know what's going to happen, but you do nothing until you just can't stand it anymore, and you lock in your losses. It's just human behavior. If you're not convinced we're on the verge of another market crash, look at this chart from 1980 to 2020. The blue line is the market, and the blood red is investors with negative credit balances. These are people borrowing money on margin and inflating the market. And what happened each time when that got too extreme? A crash. A crash. And now look where we are today. We have more credit being extended than ever before in history. Not to mention what COVID has done to our economy. Why go through all the stress and anxiety and devastation when there are incredibly effective wealth-building strategies that only the ultra-wealthy use, but the middle class gets brainwashed into following the same status quo with qualified plans like 401ks? Now, I'm going to show you how you can invest your money and never lose a dime, ever. And you can see it right here. Would you rather be invested in the red line or the green line? The red line is the market strategy, or the S&P 500, your 401k, 403b, or your IRA. And the green line is the index strategy, where you make market-like returns, but you're protected from stock market downturns. So let me explain how indexing works. You choose an index like the S&P 500, for example. Your money is not invested in the index, so it's not in the stock market, but you get the return based on the movement of the index. Your money grows however the index performs, up to a limit or a cap, let's say 12%. Now, if the market grows 15%, your money will only grow up to that 12% cap. But the trade-off is complete downside protection from market losses. So just like you would have a cap, you would also have a floor of 0. So the worst thing that could happen is you get 0 interest in market downturns. In other words, you lose nothing. So let's look at this chart again. You can see how volatile the market was between 1998 and 2013. You can see where I circled in blue that when the market goes down, you get 0 growth because of the floor. This is a comparison of the stock market strategy and the indexing strategy. At a 12.5% cap with a $100,000 balance over the last 20 years, if you would have just gone to sleep and put your money in the S&P 500 index, you'd have $153,000 more in your account with a cap and a floor than you would just writing it out. Index Universal Life Insurance, or IUL for short, offers protection with the opportunity to earn market-like returns. It's a new take on a very old stable product from insurance companies that have been in business for over 100 years. They created innovations that make this a lot more profitable for their policyholders. An IUL contract has no risk to stock market downturns because it's an indexed product with a ceiling and a floor, so zero risk. There are no annual contribution limits, no age restrictions, easy and penalty-free access to your money, market-like returns. Your money grows tax-free. You get a tax-free income in retirement. There are no required minimum distributions. You get a death benefit and living benefits and minimal fees if it is structured properly. And by saying that, you really do have to be careful because, first of all, very few agents are trained on how to structure these innovative policies to optimize the growth of your money. Or they do, and they'll actually structure these policies to optimize not your money, but their commission. So be very careful. With an IUL, you have access to the death benefit tax-free while you're alive in the event you have a chronic, critical, or terminal illness. It allows the death benefit to be distributed before death to pay for qualifying medical costs and long-term care. One of the most powerful concepts behind an IUL is the ability to access your cash by taking participating loans from your cash value to finance big-ticket items like a car, a vacation, or really whatever you wish. But I think the most exciting benefit of this strategy is taxes. Because this properly structured IUL takes advantage of IRS Code 7702, which allows your retirement income to be tax-free. Your money grows tax-free, like I said. You pay no taxes on your IUL retirement income, no taxes on your estate and inheritance when you die, and the beneficiary pays zero taxes when they claim the life insurance death benefit. To wrap up, IUL is one way to never lose money. A fixed or indexed annuity is another way. If you're interested in learning more about IULs or annuities, check out my detailed videos on those topics. And if you're interested in learning more about IULs and annuities and the whole strategy, I would recommend you take my masterclass. It's about an hour long, and it's called What the U.S. Government and Wall Street Don't Want You to Know About Saving for Retirement. At the end of that class, you will get an invitation to apply for a free retirement income analysis, where I'll show you exactly how much annual income your current retirement plans will produce and how long it will last. And I'll put a link to my free masterclass and the retirement income analysis below. If this video has been of value to you, please give it a thumbs up, comment, and subscribe. And once you subscribe, hit the bell to be notified every time I upload a new video.